This is back roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. Today is edition of Back Roads of Illinois. We are bringing you lasted for farming sources and information sponsored by AgriGold. We are glad you're here on today for our program. I am Cesar Delgado on today. Well, the harvest season is approaching, and the fertilizer markets are watching the trade deficit and demand for post-harvest season without drying fertilizer. We were talking about the fertilizer markets with our friend Mike Castle of StoneX Financial Services. And the quarter report is coming up on Friday morning. How about the technical and fundamentals with these grains markets, and how are they really response from it? We are going to be asking that with Curt Kimmel from agmarkets.net. You've been listening to Back Roads. The harvest season is approaching, and the fertilizer markets are watching the trade deficit and demand for post-harvest season without drying fertilizer. We were talking about the fertilizer markets with our friend Mike Castle of StoneX Financial Services. Hey, Mike, how are you?
Doing great, Caesar. Good to be back with you.
Great to hear that. Okay, Mike, let's start with our discussion on the nitrogen cost for right now. Could you tell our audience about the nitrogen cost?
Yeah, for sure. Obviously, with harvest kind of progressing here, there's a lot more focus shifting to the fall application season. As crazy as it sounds, obviously we'll be in October next week. It's kind of hard to believe. I feel like 2025 has really flown by. But it's a very different story by product across the nitrogen market, I would say. I'll start with, I guess, the more positive side when we're talking from a farmer perspective. Urea prices have fallen notably, both on the global market and here domestically. NOLA or, just your U.S. Gulf market in general, down about $70 a ton from the start of August. It's mostly been driven by the global market, and really all eyes have been on India and China. And the big story here in 2025 is China's return to exporting on the urea side. Same with phosphate. But we just got their data for last month released over the weekend, and that showed them exporting about 800,000 met tons of urea. For them, I mean, if we were talking 5 years ago, that would not have been a volume that anyone batted an eye at. It's very achievable for them. Pretty much, I would say normal for what they used to be, but that is an enormous number if you compare it to what they have been doing here in the last year plus. In fact, that 800-ish thousand met tons that they exported in August was more than they had sent out in the previous 13 months combined. If we recall, they only exported about 262,000 tons in all of last year. So it's not just this volume of them returning that is kind of starting to loosen things up. Obviously, that big increase in supply makes things feel a lot more abundant. It's kind of allowed prices to fall in the global market, and then we kind of benefit from that. But it's, again, not just the volume of what's come back. Again, this is nothing that we haven't seen from China before. But the biggest factor in this recent break has been the return of direct sales to India. So when we heard China was going to be loosening up their export restrictions back in mid-May, obviously the return of any amount of supply was certainly welcome, added some amount of downside pressure, but there was this big caveat that they could not sell directly to India. And India, on the demand side of things, was kind of a big driver of why prices were moving higher. Very solid domestic demand there. They've had a great monsoon, so overall application demand's been very strong. They've had a really tight phosphate story for the last pretty much 2 years at this point that they've been trying to rebuild. Not quite as bad on the urea side of things, but they did still have big needs. And they've kind of failed in a couple tenders in a row, and then just in their last two, they kind of came back quicker than expected and were able to buy their full volumes, the full 2 million tons they were looking for. But this most recent tender that just ended here, we finally just got updated, finalized details on it, I think last week. But they could have bought up to 3.8 million tons. So they got offered a huge amount, which basically says there's a lot of supply out there that's looking for homes. And the reason we saw such a big supply was because of that Chinese, volumes being allowed to go into India when they weren't before. So basically, all these existing sellers from the Arab Gulf, Russia, North Africa, Southeast Asia, whoever it is, any of the major producers, were now having to compete directly with China for the first time in, let's say a year and a half, 2 years. So that really drove prices down. We saw a pretty sizable drop in the lowest offers from India's previous tender to this last one. And they could have, basically bought everything at that tender and then stepped away for the foreseeable future. But instead, they opted to cap their purchases at 2 million. And now the expectation is we'll see them come back here, within the next couple weeks, I would think. And again, they're probably doing that with the thought of, okay, China is going to disappear again when their own fall application season comes around, probably in about mid-October, I think, is when they're going to cut off, at least customs approvals. But pretty much I would expect stuff to continue flowing out of China through the next month. And if they're going to hit their quota volumes, there's going to be a lot of tons that have to move in a short period of time, which, again, would translate to lower prices, right? These exporters who have these available quotas trying to pump stuff out while they can. So India basically is thinking, okay, if we hold off and just retender, we can get lower prices and lock up what we need then. So overall, urea has kind of corrected a decent bit here. There is kind of still some downside pressure moving forward. And again, I said I would kind of start with the positives. The other nitrogen products, not quite as good. The UAN side of things holding very stubbornly steady. Even despite urea dropping, UAN now kind of looking like a premium. But unfortunately, the fundamentals do support that. We're coming into our for year 26 very, very tight on inventory, and we're exporting a lot, which is only exacerbating that situation. Our most recent month of U.S. export data is for July. It was our third largest month of UAN exports ever. It sounds like August was big as well, just based on vessel tracking data, and the same in September so far here. So a big part of this is kind of an uptick in demand to Europe, where we're kind of filling the gap left by Russia. The EU put tariffs in place on imports of Russian and Belarusian fertilizers starting July 1st. So instead of buying from Russia, they're going to have to look elsewhere, which means a lot more from North Africa, the Middle East, again, folks that we typically are buying from, and then coming from the U.S. as well. So we're seeing a lot of that stuff flowing out. Obviously, that cuts back on domestically available supply, which kind of keeps, support under prices. It's why the UAN market's been able to hold so steady here. And really, Russia's the big thing to watch here. We've seen a lot of, increased threats of sanctions or tariffs or some kind of punitive measure that would cut off the flow of our imports from Russia, which, is something that's still kind of kept, I don't know if a lid on prices is the right way to term it, but basically we're still able to import a ton of cheap Russian nitrogen. They're our biggest supplier on both urea and UAN now. So if we did see something that cut off that blow, that would be very bullish for the nitrogen market, because we'd be losing not just, our biggest supplier, but also our cheapest supplier. The tariff situation is a big part of that. They currently have 0% tariffs, and that's a big part of why so much stuff is flowing this direction. So overall, really, the UAN side of things just kind of looks to stay snug here, but the biggest risk would be something happening with Russia. The anhydrous side of things, obviously, fall application will be here before we know it now, with harvest in full swing. The weather not cooperating right now, but forecasts do kind of finally allow things to dry out and get folks back in the field. We've had some actual, I hate to say a good buying opportunity with the current price environment, but relative to all of the other nitrogen products, we have had some good opportunities to buy on the anhydrous side of things this fall. Prices are firming as we get into applications. Obviously, that's just kind of the way things typically work. As you start to see demand pick up at the farm level, you obviously don't have a never-ending supply of the stuff, especially, again, with that same export demand that we're talking about on the UAN side. It also applies to anhydrous. We're kind of seeing this strengthening global market as well. And the inland, Midwest anhydrous markets really like to ignore it when the global market is weak, but when the global market is strong, point to that and say, okay, our prices need to go up too. And the global market has had some strength here, obviously, from Russia still being absent, and it doesn't sound like they'll see a serious return to exporting until the war is over. And then, this is also just kind of seasonally a time of year where we would see turnarounds. And unfortunately, some of those are lasting longer than expected. The biggest one right now, Saudi Arabia's got an ammonia plant that's currently offline, might be offline through the end of the year. It was originally supposed to be going to see is on the phosphate side of things specifically.
What is your final thoughts about this acreage report on Friday?
Yeah, it's another round of excitement from the USDA. They've kind of been bringing us surprises, so I guess I would say I wouldn't be shocked. You kind of got to be prepared for anything at this point. But it will be very interesting to see the update on quarterly stocks numbers. The bulls obviously could certainly use some surprises to the downside there, given the size of the crops that are pointed at us. And obviously, we'll take these updated stocks figures into next month's WASDE, where we'll see updated yield estimates from the USDA. The poor finish to the season, I think, especially on the bean side, and even corn, and kind of initial harvest results, it does seem like we're kind of dropping, or our expectations for the size of the crop are dropping, I should say. The small grain summary, when we're talking specifically about the fertilizer market, on next Tuesday's report, we should be watching our, winter wheat acreage, obviously, as I kind of alluded to before. If we are going to see some amount of demand destruction, or, kind of just get some kind of indication on what for year 26 is going to look like, I really think the winter wheat guys are going to be the ones setting the tone. So they'll, obviously are the ones that always kind of kickstart the application season in the fall as we start planting winter wheat. And again, I kind of just go back to those two competing factors of you're seeing the weather kind of benefit the potential for winter wheat planting in the month ahead. Better than normal soil moisture profiles for some reason. I can't get that phrase out. Certainly could incentivize more planting of winter wheats. But again, looking at the economics, looking at the fertilizer price tag, it's ugly. Really the question becomes which side of that outweighs the other one. It'll be a very important thing to watch here moving forward. Do we see them take advantage of these growing conditions, or do they get scared off by the sticker shock of cheaper grain price, high fertilizer price? But that is kind of an important thing to watch moving forward. Given how the last few USDA reports have gone here, it's hard to want to make any concrete statements on what to expect because they have been a little bit all over the place. So, again, given that we've seen a handful of, honestly big surprises in the last few, I wouldn't be shocked if we see something surprising again next week. But truly, it's anyone's guess at this point. But obviously, getting some more certainty on the stock side of things is certainly going to help us kind of build the expectation for the balance sheet in the, marketing year ahead. And certainly as we kind of run through harvest here and get a better feel for the size of the crop, I think the trade will be a lot more certain on the supply side of the equation. And then the focus again shifts back to the demand side of things. So looking at where we can kind of secure some more export markets in China's absence, especially not just the export side, but the flip side of that, if we don't have these export outlets, what are we going to do domestically? So still a lot of domestic policy things to be worked out here, especially when we're talking about the biofuels industry, looking specifically at trying to meet USDA's soy crush number. A lot of that's going to hinge on policy, and a lot of that, unfortunately, is still kind of a big question mark moving forward here. But again, as with harvest, we should kind of have some more clarity on that in the months ahead, and then the trade can kind of shift the focus over to the demand side of the equation.
Thanks, Mike. I will see you in Kansas City for a quarter report coming up on Friday morning. How about the technical and fundamentals with these grains markets and how are they really respond from it? We were going to be asking that with Kurt Kimmel from agmarkets.net. Hey, Kurt, how are you?
Doing good for a sunny week here. We're going to get a little rain here in central Illinois. Hopefully, locally, we've been kind of missed out, but doing good. Thanks for asking, Caesar.
Great to hear that. Kurt, what is your thoughts on the Kurt, what is your thought? Early report from the Department of Agriculture. We were starting to get a conversation about it.
Yeah, that's the quarterly grain stocks report. It's going to wrap up the old crop inventories, and we'll see what happens there. There's been a lot of old crop moves, so two things: they might have underestimated last year's production. Or secondly, we're seeing some old crops starting to be shook loose to make room, such as 23 crops. So it'll be interesting to see what they come up with the wide basis and the price decline going into September 1st. I imagine there might be a few more stocks around on corn particularly. Beans, we'll see, but what that'll do is basically wrap up the old crop marketing year. That'd be the intake in number coming into this new crop, which we're harvesting now, Caesar.
Do you have any cons Do you have any concerns about the yield for this harvest season?
Yeah, it's a good time of the year. You actually get in the field and see what you have out there. Some guys don't check it at all and wait till now to see what happens. But the main thing is corn. We're hearing reports on corn yields depending if you had rust or not. If you sprayed fungicide, you're doing pretty good. If you did not use fungicide and you had rust, everyone pretty well heard 50, 60 bushels less. If you sprayed once, maybe 30 bushels less than a year ago. So you had to spray, get it twice, and the timing on the spray was the key there. But surprisingly, you know, uh, a lot of the corn and some other areas that did not experience this situation is coming in about last year. Dried down pretty quick too. The beans is the thing. Beans, at least early, is a little bit better than expected. They were worried about sudden death and white mold. So I'm hearing bean yields anywhere from 50 to 80 bushel an acre. And it depends if you had rain or not. Basically, there's two different fields, 2 miles apart, same soil type, same variety. There's as much as 25 bushels difference. One field received an inch and a quarter. The other field only received 1/10 of inch of rain, over the last 30 to 45 days.
Sure. How are things in the fundamentals on the beans market?
Yeah, it's a thorn in the side. That's what's caused the collapse here over the last three trading sessions. We were stable here on Tuesday, but particularly Friday, there was hope we'd hear about the some type of agriculture uh, agreement between U.S. and China, but they were more interested in TikTok. That's probably a highlight. But the thing is, outside the industry, they don't know that TikTok is really TikTok. We're seeing the clock tick away and not seeing any bean sales. The Asian, we have to have those bean sales pretty quick because of the fact that they'll shift their focus to the southern hemisphere. And that's probably what's going to happen because they talk about maybe visiting a little bit on October 31st. Halloween. Is that going to be trick or treat? It's going to be a trick. I don't think they're going to do anything. They want to meet after the first of the year into 26. By then, we've missed our opportunity on the crop we're harvesting now, and they'll focus on new crop beans out of the southern hemisphere. So it's quite a concern. We'll see what develops. The other thing too is Argentina suspended their export tax on grains and grain products here for a month, a little over a month until we get into end of October. So that's going to be a little aggressive movement out of that southern hemisphere. The thing is, I think they're fairly well sold up, so I don't know if there's a whole lot more to come out of that. But the bottom line, what makes the bean market bullish as we go into this winter is Southern Hemisphere sold out. If they have a weather glitch here this winter, that could ignite a pretty good rally. But it's going to have to be a fairly good weather event in the Southern Hemisphere.
How about the technical aspects on the corn markets?
On the corn, technical picture is fairly good. It broke down below the channel, uptrend channel a little bit, but we're back up in it. The key area is 415 on the December corn. If these corn up front can hold 415, it looks like 435 is resistance. So we might be in a tight 20-cent trading range here for a while until we get through harvest and see what type of crop we have out there.
Everyone knows that the cattle markets with these prices are currently browsing through these prices. What is going to be your thoughts on the cattle markets?
Boy, that's a wild card there. Fundamentally, we're still tight. We're not seeing a herd expansion just yet. The thing is, fundamentally, we kind of lose some demand here as we go in the fall. And box beef did pull back some, but beef demand is still actually fairly good. The big picture fundamentally, too, is Mexico. Talk this week, we've seen reports of a screwworm as close as 70 miles to the U.S. border. They thought we'd open the border up for feeders to come in here in October, but now it's going to be January. So that's going to keep more beef out of the U.S. Then, two, any beef that we do import into the U.S., with tariffs going to be priced on that, it's going to make that more expensive. So the market's overbought. We're due for some sharp breaks. The fat market can break $20 and still be in an uptrend. The feeder market can break $40 and still be in an uptrend in through here. So, yeah, the old cattle market, boy, it's something else.
How is the fundamental trends in the feeder?
Yeah, it's just one of those deals where we've got bullish fundamentals. The thing is, at these high prices, if we lose our demand, we'll be in a situation where we could have some price risk to the downside. So if you're buying feeders, we've been doing some price floor strategies. That way you can kind of leave your upside open on that market there. But there's pretty good risk here on buying a feeder and putting a lot of investment into it. Grain remains cheap, corn remains cheap, feeders will stay high.
You like to share anything else that we can talk about? The grains quarterly report are in the corn markets, especially with the fundamentals.
Yeah, it's kind of news on, news off. The main thing is tariffs and trade deals and trade relationships. But as we move into this fall, the biggest question for the producer is should I store or should I sell? Actually, basis level has been narrowing up here. I think the end user wanted to be negative and want the market to go down so they can buy it cheaper, and they're not seeing that just yet. Maybe tail into harvest, if we have some storage issues, we could maybe see some selling take place. But that's the big thing in here. You got to push the pencil. What type of storage situation you have. We kind of feel, we'll get, if not already, have a fall low in place that will see a seasonal up into year end. After that, it's going to just depend on the southern hemisphere. That's going to be the main weather market. But you can look at the supply demand balance sheet. You can talk acreage. You can talk yield. But the bottom line is your bottom line, and got to kind of defend that.
Thanks, Kurt. I enjoyed our conversation for today.
Very good, Caesar. It's always a pleasure to be able to visit with you. Take care.
This is Kurt Kimmel from agmarkets.net on back roads of Illinois.